Hello, cryptocurrency enthusiasts. Welcome to the fifth lesson of our course, Practical Guide to Cryptocurrency Investments. It's a pleasure to have you here again. So far, we've explored what cryptocurrencies are, learned how blockchain technology works, and discussed the economic principles that underpin this new type of asset. Now, it's time to talk about the digital currency that started it all, Bitcoin. Get ready, because today we're embarking on a fascinating journey. We'll uncover the history, characteristics, and immense potential of this revolutionary digital currency that has captivated the world. Bitcoin is much more than just a digital currency. It represents a radical shift in the financial system, a true challenge to the status quo, and an opportunity to build a more decentralized and inclusive future. In today's lesson, we'll cover Bitcoin's incredible history, from its mysterious creation to its remarkable growth. We'll understand the characteristics that make Bitcoin so unique, such as its limited supply and mining process, and how all this impacts its value and growth potential. It all started back in 2008, during the global financial crisis, when a mysterious individual or group using the pseudonym Satoshi Nakamoto published the Bitcoin white paper. In this revolutionary document, Nakamoto described a peer-to-peer electronic cash system that would allow secure online transactions without the need for intermediaries, like banks. Bitcoin was officially launched in 2009, and the first transaction took place between Satoshi Nakamoto and developer Hal Finney. In its early years, Bitcoin was mainly used by tech enthusiasts and cypherpunks, people who believed in Bitcoin's potential to transform the financial system. Over time, however, it began to attract the attention of investors, businesses, and even governments. Today, Bitcoin is the most valuable and well-known cryptocurrency in the world, with a market cap exceeding billions of dollars. One of Bitcoin's most fascinating features is called the halving, an event that occurs roughly every 4 years and has the reward for mining new Bitcoins. But what does this mean in practice? The halving is a mechanism that controls Bitcoin's issuance, ensuring its long-term scarcity. This factor has a direct impact on price. With a lower supply and growing demand, Bitcoin's value has historically tended to rise after each halving. That's why many call Bitcoin digital gold, a scarce and potentially valuable asset that serves as a store of value, especially in times of economic uncertainty. Bitcoin stands out not only from other cryptocurrencies, but also from traditional money. It has some unique characteristics that support trust in the currency. First, there's its limited supply. A maximum of 21 million Bitcoins can be created, and this programmed scarcity contributes to its long-term value. Then we have mining, which is the process by which new Bitcoins are created and transactions are verified and recorded on the blockchain. Miners use computational power to solve complex mathematical problems and ensure the security of the network. Speaking of security, Bitcoin's blockchain is one of the most secure networks in the world, thanks to advanced cryptography and the consensus mechanism it uses. And finally, there's decentralization. Bitcoin isn't controlled by any government or financial institution, making it resistant to censorship and manipulation. While Bitcoin is often seen as an investment opportunity, it has other practical applications as well. For payments, Bitcoin can be used in online transactions and international transfers quickly, cheaply, and securely. Think, for example, about international services, where fees can be reduced with Bitcoin. As a store of value, due to its scarcity and resistance to inflation, many view Bitcoin as a way to protect assets against the devaluation of traditional currencies. And, of course, as an investment, Bitcoin attracts many investors for its history of high volatility, but also its potential for long-term appreciation, offering significant returns. Now, an important reflection. What does the future hold for Bitcoin? What can we expect? First, let's talk about mass adoption. The more people and companies adopt Bitcoin, the more its utility and value are likely to increase. Regarding regulation, governments worldwide are striving to create rules that can bring more security and legitimacy to the cryptocurrency market, which could also present challenges. Another issue is scalability. The Bitcoin network struggles to meet high demand, which can lead to higher transaction fees and slower confirmation times. Solutions like the Lightning Network are being developed to help address these challenges. And lastly, Bitcoin faces competition from other cryptocurrencies that offer different features. However, the fact that it was the first digital currency and is still the most recognized gives Bitcoin a significant advantage. Bitcoin is much more than a digital currency. It represents a revolution in the financial system and has the potential to transform our way of dealing with money and investments. But what about you? How do you envision Bitcoin's future? Do you believe it has the potential to replace the traditional financial system? By understanding Bitcoin's history, characteristics, and potential, you will be better prepared to navigate this ever-evolving market and make informed decisions. Did you enjoy this content? Then take the opportunity to dive even deeper. Enroll in our complete course, Practical Guide to Cryptocurrency Investments, from beginner to confident in the digital market. The link is in the description. Give it a like and subscribe to the channel so you don't miss any updates. And of course, if you have questions or comments, leave them below. It will be a pleasure to hear from you. See you in the next lesson.